We are going to just go over volume and how we use it to gauge supply and demand in the market. A quick introduction here. My name is Arusha Pierce, and I'm one of the product coaches here at MarketSmith. And today's objectives, like I said, we are going to go over volume and how we use it to reflect the supply and demand in the market. And we will use a number of examples to illustrate these concepts, going over the high volume breakouts and some of the high volume sell-offs and how they can give us some indication that maybe some of these larger players in the market are trying to move in or move out of these stocks. And then finally, we will end the presentation with highlighting two of the most popular volume screens that we have in MarketSmith. Now, I just want to make sure we're all comfortable with the webinar software functionality. It's located in the top right-hand side of your monitor. And whenever you have a question, just type it into this little question field, and we will make sure to answer by the end of the presentation. Okay, so let's just go over the basic concept of supply and demand. So here's a pretty nice quote from William O'Neill in the How to Make Money in Stocks book, where pretty much everything is determined by the law of supply and demand. And so you're paying for that balance between, so it doesn't matter whether it's lettuce, tomatoes, eggs, beef, right? You're always paying for what people are willing to pay at that time, right? And how much supply there is out in the market. And so this does not change in stocks. And so once you really wrap your head around this concept, it's going to make it life a lot easier in the stock market, because the bottom line is you're paying for any stock that you're buying or selling at that time. You're getting what it's worth at that time. So you're buying it at that price because that's exactly what it's worth at that time. Okay, it doesn't matter what you paid for it earlier. Maybe you paid $90 before, and now if it's only $45, guess what? It's only worth $45 at that time because there are a lot of other people selling out of it. So to really try to illustrate this concept a little bit further, there's let's just use a little candy bar example. So we'll kind of step away from the stock market. And so say you're a seller of candy bars, and you have a number of different candy bars here. And so really thinking about it, you have all this supply of candy bars. And so how would you really adjust the price if you had 5 people waiting in line or 5,000 people waiting in line, right? Now, as we all know, there was a new phone that was released recently, right? And so think about it from that kind of perspective there. Those who stayed in line, right, and got this, they could actually sell that phone probably for even higher prices, right? So same thing. It doesn't really matter whether it's a candy bar or phone or stock. Those prices really adjust depending on the demand. There's a huge amount of demand here. So if you're a seller of those candy bars, if there's a huge line right there, you're going to naturally raise those prices up because there are a lot more people willing to buy it. Now, say, what would you do if you were this guy in line, right? You're one of the first there, and you can use this for the candy bar. You can use it for the phone example too. If you get one of these valuable items, what are you going to do? Right? Either you can eat it yourself, or do you buy as many as you can and then sell it down for a higher price and make a quick profit. And once again, think about those people on the phone. What are they doing right now? They're probably going online. Some of them, they might have bought an extra one. Right? I guess you could have bought a maximum of 2. You buy one and try to sell one online, right? And maybe make a little bit of profit to pay off for your other phone. And so this is all supply and demand in work right here, and the same thing applies to the stock market. So when we're talking about supply and demand in the stock market, we're really talking about the price and volume. We're going to really gauge that. Now, since we're going to concentrate on volume right here, one of the key aspects that we want to really pay attention to is right down here in the bottom, okay, and this 50-day moving average line. Okay, so it's capturing the last 50 days on a volume basis. And if that bar is closing above the line or below the line, that's telling how much it's beating that average. So ideally, when a stock breaks out or when the stock's moving up, we want to see some nice blue bars finishing above the line. Now, realistically, it's not always going to happen. As the price if the price goes kind of like here, it breaks out and really starts running up. As you start moving up, there are going to be less and less people willing to pay that kind of high price for it, kind of like a candy bar. If the price goes really high you're going to have more and more people kind of drop off and say, you know what, I'm going to hold off. I'm good. I'm not going to pay $50 for a candy bar. So this whole volume, understanding volume, how it operates in the stock market is absolutely essential, because really that long line of people demanding that product, or in this case stocks, these are the institutions. And so we're going to use this volume to really try to figure out, okay, what are these institutions trying to do here? Okay, are they buying the stock? Are they selling the stock? Because the bottom line is they're the ones moving the market. And in the end, they're the ones who are going to win. And so it's really, in many ways, almost unfair, because not only do they have a lot more money, right? So they're going to really be right in the end. They're usually even using money that's not even theirs. So now think about it from our perspective. We're the individual investor. We're putting our own money to work. So naturally, we're going to have a lot more emotions tied to it, as opposed to a trader who's hired by one of these firms. They're just given orders. And so they're able to operate a lot more objectively in the market. They're able to play a lot more games and things like that. But the longer term view, which is why we look at weekly charts, that's going to really capture what these larger funds are going to do, what these more portfolio managers are trying to do. They're trying to, if they really like a stock, they have to buy 1 million shares of the stock. And so it's not easy for them too, because they can't buy that all in one time. It's going to take them months and months to get their full share. And so we can use these volume spikes, if they're trying to buy the stock, the volume spikes up, to let us know that, hey, someone might be moving into this. And likewise, the same way, if there's some big volume spikes as the stock is moving down, that's giving us an indication that someone's trying to get out of this too. So when you're looking at this, when we're trying to study this volume, once you start understanding it, really it's very similar to following footprints. Okay, and so when we're talking about these footprints in the market, this is what we're looking at right here. These huge spikes in volume. Now, Bill O'Neill calls these skyscrapers. Okay, they really stick out. And a lot of times these might be on an earnings report, okay, which is why it's so important to start tying all of these things together. But new information might come out, and you start seeing more funds starting to buy the stock. And there's just so much volume coming into it. There's so much demand. That line is really long that you get these big spikes over the week. Okay, so this is one huge reason why we want to look at a weekly chart, because we kind of take a step back, and it kind of removes a lot of that noise. And so you see these nice big spikes here, stocks moving up. And so this is telling us that this stock is in demand. Now, where it's really critical, and this is how we really tie the supply and demand, is when we combine price and volume. Okay, so when you're looking at that volume, now we're all pretty comfortable with the breakouts, I'm assuming here. Okay, if you're not, go back to the MarketSmith webinars, take a look at lesson 3, I think it is, with the chart patterns. But we're all looking for that breakout, right, out of one of these patterns. And so we're looking at the breakout right here. And then here's the key. It's not just a breakout. We want to make sure that there's huge volume coming into the stock, because then it's confirming that there's a large line. There's a large line starting to form. Then they're all willing to buy the stock at this really new high price. Okay, so once you start putting those together, that's when it's gonna start to click. That's when you're gonna really start to understand, hey, these stocks are in true demand here. Now, I have highlighted right here, huge volume percentage 125. Now, for some of the people that I've spoken with over the phone, and we're going over just this concept of a breakout, a lot of times what I'm telling them these days is that, with this market's a little bit trickier right now, as I'm sure you've all noticed. It's a little bit more choppier. And so the one way that I've adjusted for breakouts is, now obviously I want great fundamentals in this stock. I want that great story. But when this stock is actually breaking out, I'm really requiring larger volume. Now, the minimum is 40 to 50% volume. Right, how Bill O'Neill talks about it in the book. But these days, I'm really requiring over 100% volume, because at least that's just giving a little bit more confirmation for me. And so that's how I've kind of narrowed it down to try to adjust for the whipsaws in this. So I would recommend go back, look at some of the stocks that have done really well over the last few years, and take a look at the volume at the breakout. A lot of times it's obvious at that point. That line was there wrapping around the store. They're all waiting to get that stock at this point. And so that huge volume is there at the critical time. So this is where we really, really want to see the stock breaking out powerfully on that massive volume. And so this is really all supply and demand right here. So let's go over a couple examples of this high volume breakout. And actually, it's more than 2 examples right here. But here's Ultimate Software Group. Okay, back in May 3rd of 2013. And this is exactly what you want to see on a technical basis. The stock forms a base. And a lot of times, you know, and this is actually a really good example, because notice how it tried to break out earlier. And there wasn't any volume here. And then it came back in pretty hard, right? So what that's saying is that there weren't a lot of people waiting outside in a line at that point. And then it came back in. But then suddenly new information came out. And this was on an earnings report. So new information came out, and all of a sudden that line really built up. And you saw the volume. Okay, so this is why it's critical to put all of these together and be patient for some of these and wait for that big spike in volume, because it can increase those odds a little bit more. It can tell you that there is that long line out there for the stock now, and so now the stock might have a chance at this point. So you see that big, powerful breakout. Okay, so now to get an idea of how important and how the stock really likes to act in a certain point, take a look at this volume breakout right here too. Now we'll go back here. Now this is kind of I guess kind of an uglier double bottom, but pattern recognition picks up a double bottom right here, and it breaks out on pretty decent volume. Okay, take a look at that spike, and then we saw how it works here. Okay, so once it was able to explode through that resistance area, and there were plenty of buyers at this point, it was able to trend up pretty nicely for a good year. So let's see what happens here after this nice big volume spike again on an earnings report. And was able to move up pretty nicely. Okay, and this is a stock that kind of flew under the radar right here. But it's so interesting when you start going back and looking at these technicals, how pretty clear it was that a big line was forming up here for the stock at this time, at the critical time. Okay, and so this stock went up 50% in the next 6 months. Now here's another example, Salix Pharmaceuticals. Okay, these guys have been doing pretty well lately. And here it is back on November 8th, 2013. And you can see another huge spike in volume right here. You see that skyscraper just sticking out. Look at how it towers over everything else. And it's right at the exact time as it's breaking out, right? Here's that nice little pattern, and then it just explodes through. This is exactly what you want to see. Now, I highlighted another spike here just to give you guys something to go back and study too, but look at how here back in this base, you had a volume spike and you had a nice reversal. Now, at this point, did you know that this was going to be the bottom? No, of course not. But you knew that at least here it might have a chance. And chances are this was another earnings report. Maybe it kind of sold off in the morning, and then all of a sudden you just had all these buyers, all these funds go back, look at the numbers, update their models, and suddenly the line started to grow and people wanted to buy those shares, and that pushed up the price. Okay, so I thought that was pretty interesting there, where you had this nice kind of, you had a downtrend here and then you had a shakeout and come right back up on increased volume. And then over the next couple of months, it was able to complete the base and start working again. Okay, now this one was a little bit harder because you didn't have this huge volume. Now maybe on the day you had it, but it wasn't as clear as opposed to this one right here. All right, and so this is what we just want to really just see, okay, how does volume really influence it? When you see these large skyscrapers coming in there, the stock has a chance at that point if it's breaking out of a great base and if it has the fundamentals on it too. So let's see what happened here. It's for Salix, and you can see that this went up on a really nice run. This broke out around $80 and ran up. This is a double at this point. Okay, and then now take a look at some of those volume spikes back here too. You know, it was pretty consistent volume buying at this point. Okay, now as it came back in, you started seeing the volume start to decrease. Okay, so a lot of people weren't willing to sell at this time, too. So there's a lot that you can study about volume. I want to keep it pretty basic here and just really get down the first part when the stock is breaking through a resistance area and you're seeing this huge spikes. But there's a lot of information down here that's telling you about the market, about the stock, about how long that line is. Here's another example, Cracker Barrel. Okay, notice so these are some examples that we don't really talk about, that probably don't come on your radar that much, right? But you know, these stocks, they're still behaving to the laws of supply and demand. And maybe Cracker Barrel is not the most exciting stock here, but there is some consistent buying in the stock. Hopefully you guys are seeing this now. Now I just highlighted the most critical point right here out of this large cup and then this explosion through. Take a look at the volume. Take a look compared to the previous 10 weeks, how that towers. Think that's a big change right there? You think that's a huge line waiting for the stock now? That's exactly what it is, right? And of course, the RS line is hitting a new high. So this all kind of lined up right here. And the reason why I like this example is because no one ever really talked about this stock. And it just kind of snuck by everybody. Now, there are a lot of other stocks working at this time too. But it's really nice to come back and see how the laws of supply and demand work on these other stocks that we're not always so excited about. Now, if you want to see some consistent institutional accumulation right here, some skyscrapers building up, right? Take a look at that. Okay, this is like New York City or Shanghai, right? There are a lot of skyscrapers coming up on this one, and there was a lot of consistent buying on this stock, and obviously there are a lot of funds lined up, and they were pretty confident that this stock had a chance to go higher. Now, remember, a lot of times the funds, they're looking more on a fundamental basis here, and they're projecting 3 years out, 5 years out, and they're very good at it. And so they're going off these assumptions that if the economy could grow this far, if the growth rate at this point, the target price of the stock will be such and such thing, maybe $90, whatever. And so they're just going in. And then there are points during, and a lot of times that's the earnings season, where you'll just see these spikes up. Maybe it's a great news report, whatever. But this stock goes from $70 all the way up to 120 or so, right? Give or take right there. But high 70s up to 120, not too bad for Cracker Barrel, right? And look how consistent it was after it got going, right? Just kind of stayed above that 10-week line. But look at these spikes here too. So this one's really interesting to me because it just towers over. And take a look at the volume here too, how low it kind of got at this point, but it just kept crawling up. No one wanted to sell. So a lot of times if you see down volume as the stock's coming in and the volume decreases, no one really wants to sell at that point. That's exactly what you want to see here. And then as it rises, the volume increases again. Here's ACT Activists, and another very clear breakout right here, right? And this one got extended very quickly. And you can see, look at that volume spike compared to all of these volume bars over here. What is going on, right? There's a huge line out for this stock at this point. Take a look at these volume spikes right here, right? These are people sleeping overnight, right? They're taking a few days off and they're camping out for this hot product. I mean, these are massive, massive spikes on this chart right here. Someone knew something. Some of these funds really knew something at this point, and they were very confident, and they just started plowing into this stock. And so this was activists back at a little under $80, $76 right here. And oh yeah, this only went up to 230. Isn't that amazing at how sometimes you see it so far in advance, and sometimes it's hard to, that's one of the hardest parts, I think, is you see this technical action going on, but it's kind of hard to imagine how far some of these stocks have a chance to go if they come to fruition, right? These guys are betting on a story, and if that story really starts to come into reality quarter by quarter, they're going to keep buying the stock up, right? They're never going to sell their shares for the next 3 to 5 years, right? They have some great low cost basis on the stock right here. And so you can see it how this stock just gradually just moved up. And as we know, we were starting to look at it over here, right? Look how it really just started taking off. And oh, by the way, take a look at all these volume spikes here too, right? So someone really knew what was going on with not only the stock, but probably the whole medical industry, the whole generic drugs industry too. All right, here's Activision right here, a video game company, Call of Duty. And look at that volume spike right here. Now here is a stock that was, look at this range. This gets kind of flatlined for years and years. And just had all this trouble, and all of a sudden reports earning, and bam. Take a look at that. Oh, by the way, here are some people sleeping out earlier, right? They're camping out earlier, maybe a few weeks ahead of time. Maybe they figured out that this was going to be another great product, right? So they started getting in earlier. But then the earnings report comes out, and even more people start rushing in to line up for the stock. And so this stock, this is almost a double from here. Right? Goes on its great run. Now a little bit choppy run, obviously, but you know, a lot of these funds, they're buying their shares, they're parking it, they're going off that story. They're holding for a few years, and you know what? 70% on their investments, not that bad from this $13 at this point. A nice character change in the stock. Now, is this necessarily breaking out of a base that we're looking for? No. But it is changing character. Notice that how it was in a downtrend at this point. And as I said before, this long kind of range, and then all of a sudden you get this huge week on earnings. Something was different with the stock. And so some of those funds, they figured it out. They were confident enough to make a pretty big bet on it. And as you can see, over the long run, they were right on it. So let's go over a few examples of high volume selling. Now, we have done a webinar on selling, so we're just going to really kind of just keep it pretty basic here too for the sell side. Now, you really want to get this concept down first. Okay, remember, the first thing we always want to do here is make sure we have the defense down, right? Always protect yourself. Always know where you're going to get yourself out of some of these stocks before you buy it. And when you're in a stock, if it's working for you, if you see one of these high volume selling weeks coming in there, be very careful at that point. Take that warning. Okay, go and study some of these examples. So here's AK Steel. And hopefully a number of you are seeing that this is pretty much a disaster of a chart at this point. But if you didn't really get the hint earlier, here it is again, just really plummeting on huge volume. Okay, so the odds of it doing well over the near future, it's pretty slim at this point, right? Now, eventually it could come back, but there are some funds just getting out, right? You know, maybe it's not the line out the door. This is rushing for the exit at this point, right? These are the elephants rushing for the exit. Now, if you didn't really get the hint back here, I mean, hopefully you get the hint here, but this stock was giving plenty of hints back here. Now, this is 2008, so every stock got hit here, okay? But here it comes crawling back up, and then take a look at that volume increasing compared to everything else. Someone knew something around here too for the stock. All right, and so it came back down, it came back up, and people started thinking, oh, maybe this will be okay. You know, I bought this stock only at $20, and you know it's back up to 18. You know, it will probably come back. Nope. Right. So a lot of times it takes some time for these funds to get out, but there are always going to be some funds who are going to figure out earlier than everyone else. And so that's exactly what was happening back here. Okay, over here at this point right here. Take a look at that volume. And as we can see, it got a lot worse right here. So imagine you bought it at $20 over here. And so you didn't heed this warning, this high volume selling. Now you kind of get lulled to sleep for 6-7 months, think the worst is over, gets hit again. Now you don't heed that warning. Now it just keeps getting worse and worse. I mean, this went down to $3. Okay, so we always want to make sure that we're protecting ourselves here. Okay, And if you see one of these high volume spikes, be very afraid of it, because we don't know what's going to happen, but the odds of it going lower and being pretty tough for the next 3 to 6 months, they're relatively high. Here's Abercrombie and Fitch, okay, in this kind of choppy uptrend right here. And then suddenly gets hit here pretty hard. Take a look at that volume. Okay, so try to build some kind of maybe cup kind of pattern right here and sold off hard. And oh, guess what? Take a look at this volume right here. So it tried to jump out of this cup, sells off hard. Crawls all the way back up to the near highs again, sells off hard. Right? So when you see that action on that volume coming down on huge volume, you want to be very careful of that time. And so as you can see, this got worse. Now, notice these stocks, they don't always go straight up or straight down. They'll get hit hard, go sideways for 3 months or so, then get hit hard again, then go sideways, then get hit hard again, right? So it doesn't happen all at once, because these funds, they don't want to blow up the stock. They have to kind of lighten up. And this is a lot of supply coming into the market. When a lot of supply starts coming, now just think about with the candy bars, but we'll think about the phones, since that's really in the news these days. But so you have these great phones that have come out recently, and think about the last year's model or the year before. What are they all doing? They're selling them, right? All the supply's coming in. So the prices for those phones are plummeting at this point, right? They might have been worth $600 6 months ago. A year ago, they were worth $600. Now they're probably worth $200, right? Because there are just so many people selling them. So that's driving the price down. And the same thing here with the stock. So many people are selling the stock. It's driving the price down. And so this is where we're seeing the lines for people selling the stock at that time, or selling the phones. And one more example right here. Here's Rackspace, and nice uptrend. And then it gets hit hard below the 10-week line. Huge volume. Take a look at that volume. You even get the little parachute on it. And compare that volume relative to all of these other bars. Huge, huge volume. This is a major sell signal. And so once again, if you don't have this basic sell signal down, go back and watch that other webinar on selling, because you have to get this one down. If you are in the stock and it gets hit like this, you just have to get out of it. You just don't know how much worse it can get. Okay, and this is what this is saying, is that there are a lot of other people lining up to sell the stock before you. Okay, so you better sell now, or you're gonna even get a lower price. That's the odds. And take a look at this. So here, the stock breaks out, comes back in, heavy volume right here too. Here's your kind of first kind of signal right here. Isn't that interesting? Now, they don't always go straight up or straight down. In fact, sometimes they may go higher, right? This one, it recovered. It went higher. But now someone's trying to sell again, more again at this point. They took advantage of it. Higher prices. Okay, let's try to get out more of it. Okay, especially a lot of times this is on an earnings report. You have new information. Growth is going to slow. Maybe Rackspace came out and said, yeah, business is going to slow over the next couple of years. Your funds aren't going to be happy with that. They're going to be like, oh my God, let's get it out. Let's free some money and try to put in something that has a chance of growing over the next 3 to 5 years. And so this is what happened with this stock. Really got pummeled, came back, gave people hope, got pummeled again, right? Take a look at the volume spikes right here. Notice, this is telling you a story that someone's trying to get out of the stock. So let's go over, we have a few more minutes right here. So I just wanted to cover a couple of the screens that are already made for you in MarketSmith, just to make sure you're using them. Okay, so now the first thing that everyone should do, especially if you're new to MarketSmith, is use this stock ideas button right here. When in doubt, it's up in the top right hand side. If you're looking for new ideas, just click on the stock ideas button, and it's going to open up this little window. And I've highlighted the up on volume screen. Okay, so I like to run this screen a couple of times during the day just to see what's moving in the market, just to get new stocks on my radar, or you know what, maybe catch some stocks that I might have forgotten about that may even be breaking out. Who knows? But I really like to get this because not only it's going to give me new ideas, it's also going to just give me a feeling for the market. Are a lot of stocks moving up today? And if you start compounding that and start putting that day after day, all of a sudden, if you start seeing consistently 30, 40 stocks moving up a good volume, and now it's decreased to 20 to 10 stocks moving up on good volume, that might be telling you something too, right? So everyone should get in the habit of checking this once a day at least. It only takes a few minutes. Click on that stock ideas button. Let me go right back here. So click on the stock ideas button, then click on this up on volume. What will happen is your bottom panel is going to open up, and just double click on the first stock in the screen, in the list, and then hit the space bar. And it will take you a couple of minutes to go through each of those stocks. Now, when you open up, once you click on that up on volume, it's going to open up the screener, and what you will see is this up on volume is going to be highlighted here. Okay, so now the easiest way is right below there's a down on volume too. So after you go through your up on volume list, you can click on this down on volume right in the MarketSmith stock screens and see what's moving down on volume at that point. And so that will give you an idea of the market. Now, I don't always run the down on volume, but I definitely run the up on volume all the time. Okay, I try to run it 2 to 3 times a day, just to get more stocks on your radar. So if you haven't done that yet, definitely incorporate that into your screen. If you're on your phone or your iPad or whatever, you can run it there too. Okay, so that's what I wanted to cover today. So let's just go over what to put into practice. And so if this is all new to you, definitely go back, review this webinar. We've recorded it. And get this volume concept down, because this is very, very important right here. Once you start putting that price and volume, a lot of things are going to start making sense. You will see supply and demand in action in the market. On any chart that you're looking at, you will be able to understand what the supply and demand for that stock is. And incorporate that up on volume screen. This will really just start helping you with the routine right there. But this is so important, and this is what we do every day here, to really start understanding what stocks are in demand and what stocks are being sold at this point, okay? So I'll hang around for a few minutes for some question right here, but let me put up the contact information too, just in case, so you guys can write that down, just in case you don't have your question answered right here on the webinar. Okay, we have a question here from Jamie on the proper volume pattern for a short stroke. That's a good question. There aren't that many examples of short strokes out there. Now, the first week on a short stroke, it's going to be huge volume. Okay, so that's what I'm expecting. The second week, you're going to want lower volume. It's going sideways, not really giving up much ground, and so what I'm expecting is lower volume on that second week, and just really to consolidate that price. And now, really, with the concept of a short stroke, here's a stock that just exploded through, and it's up like 10, 15%. Now, the next week, it goes sideways. It doesn't give any ground, which is really saying that, hey, everyone just made 10, 15% last week, and no one wants to sell the stock. So you can really apply that, not just a short stroke, to any kind of movement in a stock. Stock moves up really strongly, and if no one's really selling, or the volume really decreases, and stock just kind of going sideways, that's saying that a lot of people are optimistic that the stock can go higher, that the company could do really well in the future, right, and bring more earnings and sales. That's what it comes down to. Well, it's always the earnings and sales that eventually filter out into the stock. Yeah, okay, so Nicholas, feature for huge volume breakout, I would use that up on volume screen. I like the up on volume screen because it casts a wider net and brings back, not everything has to be huge volume, but but you will catch a huge volume breakouts too on that too. So I like running that a day. It's so easy. Just click on that stock ideas button, click on the up on volume button, and you're good to go. It's just a couple of clicks, and you're going to get all these great ideas. Would you still buy a stock if it's past 5% of the pivot? Honestly, that depends. Usually, no. The only exception is if it's a stock that I really like and it's gapping up. I did a whole webinar on gaps. So what I would say is to go and review that to see how we handle that. That's very rare, though, that I'll attempt that. But that would be the only exception, at least for me. Oh, Richard, that's a good question. How do you look at a stock that just keeps crawling up and does not exhibit the traditional volume spikes? I would have to look at the chart. We don't have time to pull up the chart now. A lot of times you're going to see some volume spikes. They'll generally be within the base and things like that. But at the same time, you know what? There are some stocks that love to move on lower volume. A lot of time they're the NYSE stocks, the stocks that are traded on the New York Stock Exchange. They just love to crawl up on lower volume. So generally, I'm looking, as I mentioned in the beginning, I'm looking for those high volume breakouts. And if it's not there, usually I pass. And guess what? A lot of times I end up passing on those stocks that they just keep crawling up without me. So you don't have to catch everything. And that's definitely a section of stocks right there, a characteristic of stocks that if they crawl up on low volume, there's a high chance that I'm not going to be participating in it. And that's okay. You know, I'm looking for a particular characteristic and that works for me. And so I just keep going with that, right? Once it starts crawling up on lower volume, it makes it harder for me to have confidence in the stock. And so generally I will pass on it. But there are stocks like that exist. A lot of times they're older stocks or stocks that are traded on the New York. Okay, there's a good question here, Javier. On accumulation, which one do I prefer more for institutional volume, accumulation distribution, or up-down volume indicators? Honestly, the first thing I prefer is price and volume, because price and volume is going to give you the most real-time information out there. Okay, accumulation distribution and up-down volume, they're both derived off of price and volume. They're both great indicators. I look at them both. But the first thing that I look at is always price and volume. And a lot of times if I see a stock that's under accumulation, it kind of like that ACT, right? When you saw all those huge volume spikes, if you start seeing that in the stock, it's just consistently going up. It's not a shock to see the accumulation distribution rating at an A, right? So the main thing I'm concentrating on is on price and volume. Then once I look at the other indicators, they're just kind of confirming it. I kind of glance over them just to see if anything's kind of off base on that I might have missed on it. But I'm not. It's price and volume for me. That's the big one. But accumulation, distribution, and up-down volume, they're very good, especially if you're in the beginning. You want to be using those. I would use both of them. I don't think one or the other is better, right? I think they're both really good. Okay, how do you locate the stock ideas button on the iPad? It isn't there on the iPad. This is only on the desktop. In the iPad, you just have to go to the screen, the Marcus Smith stock screens, and they're up on volumes right there. Okay, the iPad's much, on navigation basis, much easier to kind of get around. And so there really wasn't a need for a stock ideas on that. Okay, looks like, let me see the timer. It looks like, yeah, we're running out of time here. So let me just see if there's any more. Oh, okay, yeah, the up on volume, does that use the today's volume or yesterday's closing? That's a great question. Thanks, Jack. It's today's. The way it works, it's projected volume. Okay, so for instance, that stock that I showed that I was breaking out, the first example was showing the breaking out 125% volume on the breakout, where I was saying that I want more than 100% volume. That was the end, how it finished. But throughout that day, that volume was probably 500% volume. Okay, so in the morning, a lot of times, the way I'll do it, it's a projected volume. What you want to do is wait 30 to 40 minutes after the open, then run the up on volume screen. And what you're looking for is, okay, if a stock that you like is breaking out, you don't want to necessarily look for it 40, 50% at that point, or even 100% at that point. You want it 500%, okay, 1,000%. Because a lot of times what that will happen is it's going to taper off by the end of the day. It's only projected volume, so massive volume comes in the morning and at the end of the day. Throughout most of the day, it just kind of tapers off. And so generally what will happen is if it's 500% at 30 minutes into the open, it will taper off to around 100%, maybe 80 to 100. So if I see a stock that I like, it's breaking out powerfully and it's over 500% volume, that's giving me an indication that, okay, some really good volumes coming in here. This one has a chance to finish up pretty strongly at this point. So it's a projected volume. And so it is 20-minute delayed. That's why we're waiting, especially that 30, 40 minutes in the open. But after that, you will see it slowly adjust down. But it will give a very good indication. So go and look at that. Take a look at how some of those stocks finish. And once you get that down, it'll make it really easy for you to judge volume during the day. Does high volume trump average fundamentals? No, it does not, Charles. We're always looking for the best fundamental stocks out there, the best fundamental on a growth basis too. Okay, so we want huge earnings, huge sales. And so a lot of times we're using that to narrow down the list for some great growth ideas. The way I look at it is they're game changers. They're really going to change the way we live. And now once that all happens, once you have that story down, you're looking at the chart to tell you when you get into it. It may be 3 months from now, 6 months from now, a year from now. Okay, but you already have that story down. You know they have great fundamentals, and you really have a confidence that they are going to grow over the next 3 to 5 years. And so now when you see that high volume breakout over 100%, that's when it's telling you what to get in. But yeah, for the most part, it's I'm always looking for great fundamentals. Do I use convergent, divergent, with the Chaikin money flow and things like that? Alkesh, I don't use that. I have studied a number of those oscillators and things like that over the years, and for me at least, it started complicating it too much. So I ended up years ago just saying, let me just really concentrate on price and volume. And now the key is, if it's working for you, keep going with it. You know, if we have a stochastics on MarketSmith, if you like MACDs or RSI, things like that, if it's working for you, if you find it helpful in your analysis process, go for it. Now, entries and exits, I generally know. I would never use the oscillators to do that. You're always using price to confirm it. Even oscillators, if you're using any of those oscillators, those are going to give you a heads up, but you're using the price action to confirm it for that. So I'm pretty confident on that one. That's just technical analysis right there. You're always using price to confirm when you get in or out. It's very rare that you'll actually use the oscillator to tell you when to get in or out. But if it works for you, that's the biggest thing.